Hello, everyone, and welcome to Wall Street Blockchain Alliance Crypto Roundup for Friday, May 3rd. Coming to you today from New York with my co-host, Ron Quaranta. So thanks, everyone, for joining us. Before we begin, please keep in mind that anything discussed should not be considered accounting, investment, legal, or tax advice. Any mention of specific tokens, especially by me, and sometimes by Ron, should not be considered endorsements of these tokens. And obviously, this discussion reflects our individual views and not of our respective firms. For those of you joining us on LinkedIn, Live, or X, please feel free to submit your comments via the chat function. We've gotten a few already that we'll discuss, what we'll add as our co-host Josh Klayman is about to join. So with that, I'm coming to you from New York today. Ron, where are you joining us from?
I am at the Ron Q WSBA bunker/estate, David, in central New Jersey, looking at a cloudy day with all of the buds budding. It's been another busy week. I think Josh is trying to join us. There's Josh.
I'm here.
Hello, hello. So it's been a busy week, my friend. Josh, how about you?
Right at the hour, I had something that went right until but it's great to see all of you.
You missed my very animated introduction, and I said you were going to give a price quote at the end for where we were going to end the month of May. So
he's got you on the hook for Bitcoin predictions, Josh.
No, we're just having a little fun with you, Josh. But I had a nice animated intro to get us going. But I want to start off talking about this very interesting jobs number that came out today.
Yes.
And so, Ron, I'm going to flip the script on you and let you start and tell us what you think. And as you may have noticed, Josh, I know you've been busy too, is that we've had a nice rebound in crypto in the last 12 hours, and we'll say, especially since the market opened. So, Ron, what did you think?
So, I know, David, you and I look at the macro stuff a lot in addition to our at least one or two full-time jobs. For the audience, the numbers came in, non-farm payrolls of 175,000. The economic consensus was 240, so fewer jobs came in. There's a lot of other things to parse in the data. And David, you and I are old enough to remember that slightly bad economic news was bad for markets. In this instance, in the bizarre world that we live in, slightly bad economic news made everything go hockey stick in the equities and crypto market because it indicates, hey, the Fed may reduce interest rates. We're getting closer and closer to cheaper money. Like you, David, I'll always worry about what the revisions are. And David, I want to throw this back at you for one thing. Your head and my head exploded last month when we saw 300,000 plus jobs. And I remember a conversation you and I had afterwards where we said, that just doesn't make sense. And that got revised upwards for March, David, to 315,000. And then the new numbers for April were far, far below consensus. So look, I think, we've seen that run up in price. I think 1 month does not a trend make, as we all know. And I think the consensus estimate was the Fed might cut interest rates in December. That's moved up potentially to September. And lower interest rates means risk on for some folks. I'd be interested to see what next month's revision is for April. I'd be interested to see what that trend looks like. So again, it's weird economic tea leaves, David, that you and I have been seeing, but I'd love to hear what you and Josh think as well.
So one of the things is jobs are a lagging indicator.
Yep.
So I think if we look out, I think the jobs picture is probably tighter than what the numbers are reporting. And I think one thing for people to remember is we're no longer, like the Fed no longer tells us like sort of their view on a macro level. It's more data driven. It's always data driven. And so my sense is I've always believed we're going to get one cut before the election. But you run into this issue because the higher unemployment is, the more chances we get a rate cut. But, in an election year, do you want unemployment to start going higher? At the same time, people are feeling uneasy about the economy. So it's a very weird dynamic that we're in.
And David,
I was going to say, for us crypto folks, lower yields, risk on, happier crypto market.
Who would have thought, David, that we live in a world where jobs numbers come in lower, far lower than expectations, and BTC busts through 60,000 again?
There's a real bond yield correlation. And people may not like that. They may want to say it's not. There was some Bloomberg article, I think, that said that, Bitcoin going down was the canary in the coal mine for the markets broadly, which I thought was interesting. Considering, according to our regulators, we're just a speck in the total markets for their legal analysis. But needless to say, all very compelling. So even with all this compelling economic data, we've got a lot of interesting legal things going on this week, Josh. So what's been your focus, or what are the couple of things you want to focus on today?
Well, before we get to that, if it's okay, just for a second, I mean, I have to say, you guys, I have to thank you on behalf of myself and like listeners as well, because today, for the first time ever, I hesitate to admit this, I was actually looking at the numbers myself for the jobs reports and things like that. And so, yeah, I think in addition to your crystal ball, really just explaining the impacts of these or the potential impacts is really something that has been incredibly helpful. So,
Oh my
yeah.
God, we made her a macroeconomic junkie like you and I, David.
I don't know that I've become a junkie, but at least I'm like, paying attention in a way that I'm rather embarrassed to admit that I didn't before.
Most people don't, though. Like, that's the interesting part, right, David? Like, most people don't really focus on the macro. They just see the headlines. But, to Josh's point, and Josh, we're always happy to chat with you about this. For the audience, David, if I could just interject 1 second, Josh is stuck on so many text messages between me and David about
I love it.
macroeconomic stuff that it is mind-boggling.
No, please don't take me off of that, guys, because
No.
I've learned so much in that way.
Oh, well, we appreciate that. But I think also that we're always trying to tie it into the crypto markets and the impact. And I think that's where I hope the value is for people who listen. And I'm glad we converted you over.
Yeah. Yeah. So I continue to learn more from you guys. I think, a lot's been on in the news lately. One of them that I think some people may have been a bit surprised about was just the reduction in sentencing for CZ. I mean, that was a pretty big surprise for some in the industry. I don't know whether you guys had any thoughts about that, or if that was.
Well, what did you think, Josh? If you had to prognosticate, what would you have thought he would get, and we know what he got now.
So how can I answer this? I mean, if I'm being as transparent as possible, I think I realized that one of the things that was noted was that there was no evidence necessarily of knowledge of wrongdoing. I would just say it surprised me a bit.
Okay.
But perhaps that's because I just imagined that, given at least the information that I've seen publicly, which I have not been following as closely as perhaps others have, it did seem like CZ knew a lot about what was going on and actually was, masterminding things very much. Also, I think many of us remember things like the tweet saying use a VPN, once people in the US had been excluded. So, I mean, I would say I'm not questioning the decision of the judge, right, or anyone involved. Nevertheless, I would say that for deterrence purposes, it seems like a short time.
Josh, can I ask a question? I remember
personal views only, and
Yep.
limited personal views, not having all the facts. So.
Yep. Josh, David, if I could just add on to that, I remember when we saw the original Department of Justice request for, I think, something like double the recommended sentencing guidelines, and we thought, wow, that's pretty aggressive. Are they making an example? And then you see the judge come down with a fraction of the sentencing guideline, and the immediate thought becomes twofold. One was, wow, cooperation counts. Like, he walked into the DOJ, he's been cooperating, and we've seen the long history of the tweets, for example, that you mentioned. But I was sort of surprised by the big boundaries between the two. The other thing that was really interesting, and I think it was in one of the bigger financial industry publications, forgot which one, but it was almost a conspiracy theory, Josh, of, oh, what did CZ give the government? And I don't know the details, and I'm not tied to the case. And I think there's some things that are redacted or under seal. Do either of you put credence in that?
So there's a couple of things. So I want to frame it for everybody.
Yeah.
So the sentencing guidelines were 12 to 24 months. The government came in asking for 3 years, and CZ asked for, I think his lawyers asked for either probation or I don't know, maybe being at home and like with a monitor and that kind of like housebound probation. So that sort of was the range. And, you know, when I think about it, also one other thing is like, this isn't like what happened with FTX. There was no fraud that went on. Clients were not, customers' money wasn't taken, no losses, related to any of those actions. So I think at the outset, this is just flat out, these are violations of money laundering laws. And when you think about it, there are a lot of big companies that have multi-billion-dollar money laundering, fines against them, and nobody goes to jail. So, I think of it in two veins. I think of one, you see a number of big companies get these huge fines. They don't go to jail. So on one hand, I could see not getting time. On the other hand, there's a whole idea of what purpose does putting somebody like CZ in jail for 4 months accomplish? Is that really deterrence? Clearly, he's not a risk to society in any sort of meaningful way, of course. So I think there's some of that. But I think because this is crypto, he got some time in jail. I think if this was in traditional finance, he may not have gotten any time in jail. And then the last thing I'll say is, I don't have any more information about cooperation than you guys, but I'm sure our instincts probably lead that, in order to get this arrangement, that there was, discussions made and there was some cooperation given in a way that we may not know about for years to come.
Josh and David, if I could just throw one more thing out there, I think a lot of the people that read the media, there are effects to ZZ and Binance after the 4 months. I think, and I'm probably misphrasing this, but he can't be part of the day-to-day operations for 5 years, and there's going to be constant monitoring for 5 years. So there are real implications for the company itself as well.
Yeah. And look, I think the company's been impacted in the US, like, market share, and it looks like some of the states are looking to pull some of their licenses, money transmitter licenses. So I think there is this knock-on effect, especially here. I don't think as much overseas, but I think here. But again, the last thing, sorry, Josh, is that, look, we have these rules. I still take issue with if a U.S. citizen uses a VPN. Now, I realize in Binance's case that they were directing them on how to do this. But if you enter an agreement and you violate the reps and warranties and say you're not a U.S. citizen when you are, and you use IP addresses that aren't US IP addresses, I still disagree that a company needs to be responsible for that. If we were in contract law, these contracts would be voidable. You violate the reps and warranties. You can't cure the breach because you're, a US citizen. So I still take issue with that. And, I don't know if that played into the sentencing, but there is a role where these are people of their own volition doing these things, not being, forced into doing these things.
By the way, I saw something flying off to the side, I thought, and that's where my eye went there. I was not really.
Okay.
But I got sight of myself.
Okay. I thought you wanted to add something to that. But so like there's been a lot that's gone on the more legal side, not on the sentencing side this week. So what are a couple of things that you've been focused on that you want to share with the audience?
So, well, one of the reasons I hesitated to bring this up last week, before when you asked, was that I couldn't remember, frankly, whether we covered it last week. And that was the consensus v. SEC case. I thought we did cover it. And so I didn't know if we wanted to retread that ground. But happy to do so if you guys think it would be
helpful. Sure.
Yeah.
Yeah, I
Real
mean,
retread.
yeah. Well, actually, now that you said retread, maybe I should pick something else. All right, I'll put that to the side for a moment. What I do think is interesting too. There was an article that was talking about this reported Wells notice to Uniswap, right?
Mhm.
And that was sort of an opening shot against DeFi. And I think there are rumblings throughout the digital asset space about what could be whether that is in fact an opening shot and what could be coming next. I I think, and actually maybe this is a bit of a perhaps good retread. Like if we think about what we were talking about when we initially were discussing, surprise about Uniswap getting the Wells notice,
Mm.
right? After having seen that decision involving a wallet by Judge Fela, right? It's all the more interesting, I think, to see the consensus v. SEC case, where again, reference is made to that wallet, right? Non custodial wallet. And so, yeah, I mean, these are the sorts of things that clients have been very interested in this week, like understanding how this maps potentially to their business, even in the absence of, frankly, new definitions or new rules adopted by the SEC. I think that's been a big focus. Frankly, a lot of my focus this week has also been on matters that are really related to not necessarily stuff in the news, but just, digital financial market infrastructure and
Mm.
changes in that regard. So I think we're going to be seeing a lot coming down the pipe. We already have, in many senses outside of the US, in terms of, as we've talked about in the past, tokenized bonds, but also, folks are really, we talk about builders keep building. Folks are really, really focused on reimagining capital markets right now. And I think that's irrespective. I guess, I suppose it's supported by, the recent price increases in Bitcoin, but it seems to be something a lot more. I think for that reason, a lot of the legal advice that I've been giving this week, or the things I've been focusing on, really have been more client specific than necessarily what's in the news.
Oh, interesting.
What about you guys?
Well, I can tell you that I've been having conversations with, our clients a lot about compliance and also about non-custodial wallets and the treatment of those wallets and, reimagining. Some clients want to be in the US, but they're now asking, should we be in the US? And, if we are in the US, what is our exposure? And then, from a compliance standpoint, what do they need to be doing? And another one that I wanted to bring up was the Eigenlayer airdrop,
Mm.
which I thought was fascinating. So I'll go into that a little more, but I don't know what have you been focusing on, Ron, when you're wearing your pseudo legal hat?
So when I am not a lawyer, for everyone in the
Yes.
audience who knows, and Josh and David have heard this far too much. So Josh, I just wanted to follow up on a couple of things. And Josh, one of the things you mentioned, this kind of reinvention of financial infrastructure, and I agree with you 100%. And it always brings me back to, and I say this phrase probably too much, tradfi eating crypto, and it's probably not particularly accurate, but I can't help but look at BlackRock.
Mm.
Now the largest tokenized, I think it's treasury funds. David or Josh, correct me if I'm wrong. When you look at, one of the things we texted about earlier this morning, I had seen a report that we've got sovereign wealth funds around the world now starting to look at potentially being part of Bitcoin ETFs worldwide. David, you and I have chatted about the news. Morgan Stanley might be able to make their brokers have access to US-based spot Bitcoin ETFs. So, Josh, I kind of think you're right. The infrastructure, the foundational layers of financial markets are evolving in great measure because some of the things the three of us see on a day-to-day basis, that eats up a lot of the time we see, because a lot of our members are banks and broker dealers and fintech and hedge funds, and it becomes what's the next 5 years going to look like for us? What's this market going to look like in 20 years? And that's a really dynamic conversation. The one other thing, and Josh, if I don't mean to put you on the spot, but I do want to retread consensus ETH one more time, because there's always the politics of it. And one of the things that really popped out to me was in the wake of the news about the Wells notice for consensus, some Congress folks came out and said, hey, Chair Gensler misled us. And how big a deal is that, I wonder? Because, in the past we've talked about Hinman mentioned Ethereum, and the regulator has said that's not policy particularly. Did both of you see that? And what's your perspective on that? I thought it was a big deal.
Oh, I'm definitely letting Josh go first.
So I must confess I didn't see that exact statement. However, having heard how you characterized it, I guess, on one hand, I would say maybe that will compel Congress to act and actually try and rein in the SEC if that's a widespread view within Congress, right? On the other hand, just personal view, I mean, Gary Gensler's been pretty vocal, although he certainly was very cagey and didn't give direct answers when asked specifically about ETH. He had the opportunities to say those things. And I think he said things like, I don't think you'd want me to answer that right now. I think you'd want me to have more facts and things like that. Yeah. The one thing I'm really not clear on still, though, is to what extent the consensus versus SEC case is to get, a judgment out there, for example, that ETH is not a security, right? Or that transactions in ETH are not transactions in securities, versus to what extent the Wells notice that the SEC reportedly delivered, right? Whether that specifically relates to ETH or whether that just relates to at least one token that is, compatible with MetaMask, because we've already seen in the SEC's complaints against certain platforms that it is alleged that certain, at least one token that comes to mind within the Ethereum ecosystem, right, would be a security in the SEC's view, right? Again, this separate, let me just clarify, SEC's view based on its complaint. So that's one thing that I wonder. Either way, I think we want to have answers about ETH, right? Mm-hmm. So just to be clear, I think it makes a lot of sense to try and get that before a judge, especially in the district in which they filed, right? Which I believe is the Northern District of Texas. Okay? Mm-hmm. And yeah, but I do wonder about whether there's a difference between what the SEC may have put in the Wells notice versus that other question of ETH. Mm-hmm. Like, what do you guys think? Do you think were you able to tell from the complaint whether the SEC was 100% going against ETH in that Wells notice, or whether?
You go, David.
Okay, I think the Wells notice was probably filed when it was so that they would have a defense against rejecting an Ethereum ETF.
Yep.
So this is my three-dimensional chess view of what's going on, and then my second layer to my second dimension is that I think this is all going on now because we're in an election year, and I think there's a major push against crypto on the regulatory front because the composition of both the Senate and the president after this election could change. So in my view, we are really going to see an uptick in all of our regulatory agencies acting against crypto through the election. And so I think you're seeing the Wells notice, with MetaMask and with Consensus. We're now seeing the one with Uniswap. I think the majority of people believe we're not going to see an Ethereum ETF. And the thing that actually worries me are these treasury regulations that have been floating around and the potential impact on the ecosystem about like unmasking unhosted wallets and things of that nature. So I think we're in for sort of regulatory push 2.0. I don't want to call it choke point 3.0, but from a regulatory standpoint, it has that feel to it. So I'm kind of viewing this as a coordinated last push against crypto in the next 3 to 6 months.
Just to weigh in on that, I don't disagree with you, David, but it is interesting to see how members of Congress are reacting. So in the past week or so, and I think maybe 2 weeks, the three of us have spoken about, I think Senator Lummis and Senator Gillibrand reintroduced new stablecoin legislation, which I still need to go through with the highlighter and try to understand, but I think that's important. There are new draft pieces of legislation, and I forget the congressperson who submitted it, One was very specifically trying to target the prior requirement or regulation that mining rewards rather are taxed on receipt, not on sale. And their pushback was you should only tax that on sale. So there almost seems to be this kind of legislative, hey, regulators, we need to get more involved in some of the decisions that you're making, which I don't think we saw a year ago. I mean, we had Senator Lummis, we had Senator Gillibrand, we had the usual cast of characters, but these are new names in the House coming forward with draft legislation. And if I could just make one more point, because Josh and David, you both mentioned this. We talked about unhosted wallets. So earlier this week, I had the privilege of moderating one of the WSBA webinars, which had all of these accounting geniuses talking about the new 1099 DA form for digital assets. And if you look at the form, one of the things it requires brokers or exchanges to submit, and it requires taxpayers to file, asks for things like, what is the unhosted wallet address? There's almost a doxing of these address names. And one of the conversations really went to, how is this going to be possible? How are people going to be able to comply? How are exchanges going to be able to share this information? So I think, David, that aligns with some of what you're talking about, which is let's throw up everything against the wall, says the regulators. And, as we get through the election year, it's really going to be a messy tax season next year, I think.
I think it's going to take another year.
Yeah.
I don't think that with all this in flux, it will be reasonable. Because I expect lawsuits to ensue, and I think people are going to push back very hard. So I don't really see it being tenable this year. But look, and again, I don't want to make this partisan, but one of the tax ideas that the administration's floated is taxing unrealized gains.
Yeah.
And so the taxing unrealized gains sort of is consistent with the minor point that you made about taxing miners, upon receipt, not upon sale of those. So I think there's a broader view economically about how to treat crypto, and that sort of is a bigger view, across different asset classes.
I mean, look, there are real conversations, and we've seen it from the usual suspects in government, in the legislature, David, about things like a wealth tax. To me, these conversations are reflective of, I don't want to call it an ideology, but certainly that perspective on wealth building and value in America.
Well, sorry.
Go ahead. No, go ahead. Josh, go ahead.
So in addition to what you guys were saying about a wealth tax, or also, the election year and things like that, I think the focus on national security by our government, I think this is another way, right? That's part of what this is about, is I believe making sure, that bad actors or hostile governments aren't somehow, trying to take advantage. Now, we all know we should know from Chainalysis and Elliptic and others, that the numbers that have sometimes been discussed in terms of illicit uses of crypto, in many cases have been quite overblown, right? And not accurate. Nevertheless, I do think it's really interesting what you were just saying about like the doxing of the wallet holders, right? Essentially. If we think back to years ago, I think probably 2018 with Gladius, Airfox, and Paragon, right? Where they needed to register relating to their ICO. Yeah. They were asked, actually, in connection with that enforcement action, with those enforcement actions, when I think back, people who wanted to obtain some kind of redress, economic redress, had to affirmatively provide their wallet addresses, where they bought the tokens and things like that. And apparently, my recollection is the uptick or the uptake for that was relatively low. And then if we fast forward to some of the enforcement actions that we saw by the SEC against NFT issuers, right there, at least one of them in the settlement order, it said that they would provide wallet addresses, right? That's my recollection. And then here, it's an even broader group of saying who would need to provide wallet addresses. So it's interesting, like the creep between like voluntary to like, okay, here's an enforcement situation to now just ordinary course. You need to provide this information.
Yep. And Josh, if I could just add one more thing to that, and it's a really great point you make, again, diving into the form and stuff. I'm not an accountant, but they also talk about, these unhosted wallets and the whole, when you look at the unhosted wallet providers, I won't name the names, but the stuff where you can actually cold store, they also have apps. David, you and I've chatted about this, where you can actually buy or sell your crypto leveraging the app and the cold storage unhosted wallet. So, Josh, does that, are they brokers now? Are they MTLs? It really creates this vague kind of what the heck is this perspective?
Yeah. Well, I think you both know what my view on this is. So,
we do, old friend. We do.
I've already said the quiet part out loud on this issue a few times. But no, I think this is problematic. I think unmasking people's wallets is not consistent with the goals. Look, I've never really thought this was a national defense issue. I think on the fringes, there's some money laundering, that some terrorist financing, but such a small percentage of it. And remember how much cash is such a big percentage of it. I've always thought this was a tax angle and not a national security angle, and I still sort of believe that.
So I don't disagree with you. I do think it's a tax angle, and I'm not saying that it necessarily should be a national security angle. I'm just saying that, I believe that many legislators and regulators are choosing, rightly or wrongly, to look through this frame, right?
Yeah.
So just agree with you both, as always. Absolutely agree on the tax angle. And if you look at the budget for next year, the government is anticipating $10 billion in revenue simply from taxation of digital assets in the new 1099 reporting form.
Mm. Well, I guess they've been listening to where I think crypto is going to go in the next 12 months and then prognosticating off of that. But
some of the broadcasts are catching up with us, David. Yeah.
And wait, didn't we this week also see that that tax case, the $50 million
yes,
against
Bitcoin Jesus.
Yeah.
Yes. I think we should delve into that more next week, because I saw it at a high level. I know he renounced his citizenship, but I know there's a lot of, and taxes were paid on some level, but I want to really sit and dive into that. And that's a good segue into some of the things we're going to focus on next week. But for me, one of those will certainly be, diving into, the case that's being brought and what's being alleged. Especially since he renounced his citizenship. So I think that's one of the things. I'm also going to do another check on, who has access? Are all the wirehouses still, pushing back on access to these Bitcoin ETFs? I think the answer is yes. But, with BlackRock and Fidelity teasing that sovereign wealth funds and institutions are wanting exposure to Bitcoin and to crypto, my sense is that they must have a sense of when this is going to happen. We've been talking about it, that this has been what's preventing a number of bigger institutions and high net worth clients from getting access. But my sense is they must be clued into when they think that might actually happen. So that's another thing I'm going to be looking at. And then I'm really curious to see, from a price action perspective, what's going to happen this weekend. Will there be a follow through from this, or on Monday, do we see giving, half of this back when people go into the jobs number some more? What about you, Ron? What are you focused on?
So a couple of things. One is, and I have a quick question for that before I get to the focus, David, if I could. You and I have been around financial markets long enough. It's still an old saw, a sell in May and go away.
Yeah.
Do you think that applies to crypto? Because I'm looking at some of the price action and I'm trying to figure out, and again, none of this is investment advice for anyone in the audience. I'm trying to figure out what's that trading range. Is crypto now kind of emulating some of those things?
Look, I think the last few years, crypto, like the movement has been soft in the summer. So this year to me, so I think we've been in a range between like 60 and 72,000. And as long as we stay in that range, we had a range break yesterday, but now we're back in the range. That could be the range that we stay in for the summer. But I do wonder if, the spigot fully gets turned on at the wirehouse banks, and we start seeing some sovereign funds or some institutions buying and announcing that they're buying. I wonder if that is the next catalyst, even if that happens before the end of the summer. So that's my one big one
Yep.
big caveat, or like a black swan event. Those are my two caveats.
Yeah, I'm with you. One of the things I'll be focusing on, Josh, you mentioned it, the Bitcoin Jesus case. I'm going to give that a review. I'm certain it's going to come up in our next legal working group meeting. I'm not kidding. I do have the yellow highlighter here to give a review to the Lummis Gillibrand new stablecoin items. And I'm going to try to get a handle with the team on the new draft legislation that's been put forward. It's really across a broad gamut of items. And in addition, tomorrow is May 4th, as in May the 4th be with you. And I expect an intense debate with my wife over who owns the remote control in the house this weekend. But that'll be my plan for the coming days.
Uh-oh. Are you secretly a Star Wars geek, Ron? Did we not know this about you?
I am unsecretly a Star Wars geek since 1977. I mean, I don't go to Comic-Con or anything, but
No judgments, Ron. Like,
no, but arguably I'll lose that debate with my wife, which is totally fine. And David, I had to ask: are you jumping into the Maserati Quattroporte, heading down to Miami for the suite at the F1?
no. Actually, I am proudly parenting this weekend, although cutting out some time for Cinco de Mayo activities on Sunday. But
Nice.
no, my little one is taking the SAT tomorrow, so I will be taking her there.
Good luck to her.
Yes, and so I will not be partying at F1 this weekend, but I hope
Josh, what
everybody
about
who
you?
does. I hope everybody who does enjoys it. So, what about you, Josh?
I mean, I hope to catch up on some reading, but most likely, I feel like the level of busyness has reached a peak, which is a great thing. And I think it bodes well for the future in the digital assets market, because I imagine what I'm experiencing is being reflected more broadly, certainly. But yeah, I mean, I think we are seeing a resurgence of interest, not that it ever went away, but of people looking to, I don't want to say, well, I'll stay away from words, but more interested in tokens than they have been in a while. For a while, people were moving to, more to equity or other sorts of things. And I think folks are really interested, again, in tokens, but also more broadly, I mean, given the maturity of the industry and given how the markets have worked, a lot of the questions that people are grappling with, and by people, I mean companies, projects, they're not just the basic issuance questions. They're like, okay, we've been established for many years now. Like, how are we compensating employees, contractors, others, right? Also, looking at things like I was talking about with the digital financial market infrastructure type questions, really examining how you give things like enforceability opinions and other comfort, what you can give when you're dealing with things that may be dematerialized versus meaning like the paper, no paper, if something's tokenized versus digital native. And I think also with all the flurry of new potential legislation, that is running up against a backdrop of potential transactions. And so as we sort of look at the types of things that are being proposed and we think about, okay, what is the long game here? What is something going to look like post transaction? And then playing it out against various potential legislative moves, it's complex, right?
Josh, David, if I could add one last thing there, and a really good point, Josh. And I'm wondering, one of the things we should cover in one of the future broadcasts is one of the data points we're tracking is also funding in the space has come back around, including, Josh, to your point, for token projects, for blockchain-based infrastructure products. I mean, last year it dried up to nothing. And now the VCs are back. And part of me wants to look at that and say, wow, that's great. The builders are building, investments are happening. And another part of me kind of worries about whether or not we'll go through that hype cycle again. Are you seeing the same thing?
So it's funny you say that, because like a couple of projects we've been working on are doing due diligence on token projects for companies that are looking to invest in them, or individuals. So we've definitely seen an uptick in that. Look, I think we said it here before. As prices go up and projects have more capital to work with, they're putting it to work and they're looking at new initiatives. So I'm not surprised at all. And look, once you see that crypto's had a really positive year to date, showing so far, there's that VC money that's been sitting on the sidelines looking for the right projects to invest in. So I think it's correlated, and I expect to see more of it. And we've certainly been busy on my end on a number of things, and maybe we'll talk about some of that more next week.
Yeah, I mean, one of the things that's roared back, Ron, is I mean, not that they ever went away, but token warrants are everywhere.
Yes, right.
And so I think that's a big thing. I also think, just speaking of the VCs for a moment, there were some articles that were published just in the past week or so, maybe a little bit longer than a week, by A16Z.
Yeah.
And I think Miles Jennings, plug for Miles if that's who in fact it was.
Shout out to Miles,
yeah. So just talking about, quote, rules for if you're going to issue a token. And I thought they're well worth a read. And I think it's really interesting to see and heartening to see how the industry in general is evolving, and also anticipating legal risks in light of what we've seen so far, even as courts are battling it out, or battles are being fought in courts about some of the very fundamental aspects of tokens and token issuances.
I know we're over time, but I've got to throw one last thing out there. I'm sorry, guys. I got to ask. One of the other things I'm really fascinated by is public company exposure, to particularly to Bitcoin. Everyone knows Michael Saylor and MicroStrategy, and they keep doubling down on adding Bitcoin. We can talk about how that's valued and tax treatment and all of that. But the interesting thing I saw this week, David, I'd love you and Josh's thoughts on it. Jack Dorsey and Block publicly allocating some portion of proceeds from rewards for, I'm probably screwing this up, but they're investing more in Bitcoin as a public company. And they posted or sharing the blueprint for other companies to do that. What did you read out of that?
Look, with the accounting treatment being changed, it's given companies, and we've talked about this too, it's given companies more ability to do that. And look, if you have a big cash balance on your balance sheet and you want to allocate some of that to crypto, and you're in the crypto space in particular, I think it makes a lot of sense. And look, I could see a world where, a number of more companies start accepting, stable coins. And I don't want to pick one out over the rest, but we'll just say there's some companies that are now taking USDC. So it doesn't surprise me. I think companies have wanted to do this. Again, like a theme we've all talked about is like, I think the demand for these products and services are there. It's just been tax regulation or uncertainty that's prevented, companies in the US from doing a lot of these things.
All right. I think that's enough.
Well, this has been great. I hope everybody has a good weekend. May the force be with you, Ron.
May the fourth. Oh, you're so bad at Star Wars.
Well, I said the force intentionally, but I don't know which Star Wars movies you'll be watching, but I hope you enjoy them.
All of them.
And everyone should have a margarita on Cinco de Mayo. That's my send away. So thanks, everyone. We'll look forward to talking to you next week. Take care.
Thank you, everyone. Bye-bye.